Hi. As many of you already know, we have a membership site, and our level 3 membership called Raise is our rankings and trade setups. Also, get all of our videos. What we did was take the 81 best traded symbols, that stocks, futures, and ETFs. That's based on volume and how widely followed, and also that they're good option trading stocks. And we have set up a ranking system in 3 different time frames. These are for long-term investors, for swing traders, even shorter-term swing traders, and shorter-term day traders that can use our rankings system. Also, we put out trade setups on most days, between 1 and 3 setups that have been, well, really quite good. We've added a new feature now that we thought was really important, so I wanted to go over that with you. We've added a legend and we've done some tweaking around that, and I'd like to really take this opportunity to explain it in some depth. We knew we needed 2 things in the area of refinements. One was a way to bring together some of the analysis, specifically the momentum analysis in the intermediate and shorter term trends, which is really the wheelhouse of most of our members, most of the traders that watch the stuff that we do. So we needed to come up with something that kind of put that all together, and also something for option traders, specifically strategic option traders. Big problem for strategic option traders is poor entry, or that they trade against the momentum. Sometimes strategic option traders put on trades that don't really take into consideration the momentum, some kind of neutral type strategy. But then as the market moves, or as the individual security moves, their position turns into a position that's going against the trend of the market. So what we wanted to do was come up with some rankings that were really easy to understand, that combined the intermediate term and the shorter term momentum studies, and did that in a way that could really raise the probability of success for option traders by being able to properly affect their bias based on their positions, and understand when there's a possibility that there's a trend that could be in force, where there are strong momentum, or that it was in a place where the trend or the momentum could soon stall or even reverse. We think we've done a very good job at that. So I'm going to do a quick little review of our level 3 service, and then get into the understanding of this option bias service, which I think is really cool. And I'm going to give some examples on charts also, just so that you can get some sense around how to use this. So first thing we're going to do is we're going to go to our website, just so that you can see where our option bias service is, and how to get in there, how to get to our level 3 service. And a lot of people that really are not that familiar with it. So here is that look at the web page. So here you can see there's our front page, and well, I'm not going to come back to this, but just so you get a sense, this is the results of our level 3 trade setups in here, where we've had 65% positive, 26% negative, and this is the last 15 we always have in there, which right now is 11 and 4. So when we rate them positive and negative, that is a reasonably good opportunity based on our setup timing and location, that you had a good possibility for profitability, or the possibility or no good possibility. So that would be the negative one in there. So what we're going to do is click on the dashboard, which is how our members right up over here get into the site. And you can see if I click on the dashboard, it's going to bring up the different icons in order to see this is where the videos are, and then for our level 3 level 4 members, they can get into email me directly with questions, and here is our rankings and setups right here. So I'm going to click on rankings and setups and go into that page, and there you can see it. So on the top there's a description of the different ways that we use the rankings and setups for investors, swing directional traders, and for strategic option traders. And that's the new option bias right there. Now, for our subscribers right now, you will notice that we have moved the legends. Now you'll see this button right over here that says legend, so that you can understand what the different rankings are that we use. And if I click on that button, it's going to take me below the table to all of our rankings. So if you see, let me just move this down so you can see that right there. This is the table for our intermediate term momentum. We have this separated out because this essentially has our cycle analysis in there also in these rankings. So you can see that these are the levels of positive momentum on the intermediate term, and these are the levels of negative momentum on the intermediate term. That is for I'll show you that on the table in a moment, for either use with the shorter term trades or longer term trades, depending on your focus. And there is the long term table right in here, so you can see positive, negative, and neutral. That's the legend. And this is our trade setup legend. And the green ones are long, and the red ones are short. And this is by level of confidence. So an average level of confidence or a counter trend trade would be only a level 1. And then based on the positioning and timing, we could be at the highest levels of confidence on the trade. So here's what I want to do now is go into the option bias legend, and you can see that right in there, so that we can get an understanding of what this means when I go over to the table. So basically you can see it's P3 down through P1 and yellow, neutral, and the same thing N1, N2, and N3. The P1 and N1 are orange colored. The reason for this is because what this is a warning that the trend is in this case positive, but there's an extreme overbought condition. You can see that, and that if there's any upside movement left, it's liable to be slow, and a downside reversal is imminent. The same thing for N1, an upside reversal is imminent. In other words, this is final stage of the negative condition of the particular security. Now, for P3, basically, this is the one where you're going to get the most upside acceleration, and that you're likely to get long moves on the upside, and the same thing for N3. You're likely to get some downside acceleration, and that will give you the biggest or longest declining phases also. So that's the table. That's the legend. I want to go to the table way up over here. So I'm scrolling to the table so that I can explain this. This is the rankings and setups table. So there are 6 columns in here to really pay attention to. This is the long-term column in here. This is for investors. So if you were to want to look at the conditions of stocks, you would see that, like Apple, Aetna, Amazon, Avago, those are all long-term positive stocks. The intermediate term gives you a reading that, well, they're late. See, this is late stage. The P1s, that means they're just getting ready to roll over on their patterns. So you would be fully invested, but you would probably, not do a lot if you were a longer term holder under those conditions. For the swing traders, what this says is that you use the intermediate term and short term. So like for Aetna, swing traders would probably be looking for short side trades. And with the short term positive in here on these three stocks, Apple and Amazon and Avago, you probably wouldn't do much in there because you're kind of waiting for a negative signal to occur in there. So the option bias is the next one right over here. And what this does is combines these with some other studies that we put in there so that the option traders can get a sense for the conditions. So you see Apple is a P3, and it got upgraded there to P3 in our last reading, which means that, you know, it's in good condition to be moving towards the upside. Now, we put notes in here that you can see in the notes section, and our trade setups go over here. Anytime we put in a new trade setup on that day, it's going to have 3 stars. You can see that we have that noted right over here. That would be for today's trade setup. And if we put in a note or a trade setup, we will put that on the left side of the page, and you can see that right in here in the description. So you'd see an N on the left side when there's a new note for the day, or a trade setup, you'd see that in this column right over here. So it's pretty easy to understand, but what we want to do is really now to start to understand the option bias. And I think that the best way to do that would be if I transposed these biases and how they changed onto a chart, so you could really get an understanding of that and how this really works. So I'm going to switch over now, and we're going to look at 7 different securities and 5 stocks, 1 future, and 1 ETF, just so you could get a sense for how these option biases work. So we're going to start out with Schlumberger. Now, these are stocks that are in our rankings and trade setups anyway, and stocks that, you know, high volume, pretty good option trading, some of them excellent option trading. But I wanted to get kind of a mix in here that you could see how this really works. So this is the chart of SLB Schlumberger, and we're going to be looking at this last 6-month period right in here to get a sense for how this works. So if you look at the early part of the chart 6 months ago, this was negative over here. It was just finishing being in a negative stage. What happened is that right over here we got a P3 rating. And when that happens, you get a sense that you are going to enter a stage where you could get some good upside movement. This is a very short period for that. And when you got orange in here, it warned a P1. So think of this as 3, 2, 1, you know, blast off. The three is the early stage of the advance. The 2 is a later stage or potential topping stage, as you see right over here. The P1 is it's running out of steam and very, very likely to reverse. Now you could see those P1s right over here, those were terminations of upside moves. So let's just run through this in here, and you'll get some sense about when you get the particular rankings and what it means. So here, anytime you get that type of acceleration, it turns in neutral in here. It's not really neutral, it's just saying that this is a zone where we don't really have a good rating. It's already terminated and likely to come down. So we're waiting for the next signal to see if it's going to go down and then go back up, or it's going to give a negative signal like it did in here. This one gave the negative signal here and fell for about 9 or 10 days. Now, that's a relatively short period of time, and once you got to the N2 reading that you got right here, that's telling you that the downside momentum is starting to disappear. And you could see that actually did end the movement in there. Now take a look here where the N3 started, and this is really up, I'm sorry, P3. this is really a key. When you get a P3 reading, you're likely to get into a long upside move. I mean, you have to be really concerned about that. Through this entire period in here, a 9-week rally, this stock was very self-correcting. Even in this dip in here, it did not give you any kind of a negative signal or a warning. So what that tells us was that the intermediate upside momentum was so strong that any corrective periods in here really kept it from going into a neutral or negative period, warning that there was going to be more upside moves. A 9-week rally. Now note in here, as you see towards the top, where it started to get tired and started to get overbought. So what happens is that our overbought studies start to warn us that something is changing in here. So it got slightly overbought here, it started to struggle, and then on this move it got very overbought and warned us we were in termination stage. And that was the end of the rally. So then it rolls over and actually went negative, that you could see right over here. Went N2 and then rallied back and went N3 again. So right now the odds are high that it's going to be rolling over in there. So that's a good look at how this works. Now, some things are going to be a lot smoother and some things might even be choppier. So let's take a look at Amazon, AMZN. This is an example of a stock that has been totally self-correcting and really never getting overbought. This long 10-week rally occurred in here and it never got overbought. It went neutral for a bit. Now, what neutral means is that the studies became conflicting. The intermediate and the shorter term studies and the overbought oversold situation were in conflict. So we didn't really have any reading that was strong in here. But right at this point over here, it became a P3 again, which said you're likely to get into a long advance. And this was a 13-week advance, and it still has not gotten overbought. We have not even gotten to P2, giving any kind of a warning. So this has just been outstanding in letting option traders know that there's no reason to fade this on the upside. The bias is long, and any dip in here is likely to continue to move on the upside. So that's a look at Amazon. Take a look at Goldman Sachs. We're just going to go into some other areas in here. This is the financials, and you'll see how this worked also. So this was in a rally stage here, P3. Right here it turned P2 and then ran out of gas. It had about 5 more days in here to hold up, and it started to roll over. It is chopping around in here, and right at this point right over here it goes N3, which meant that the intermediate and shorter term momentums were giving us warnings that this was going to go into a declining phase. So this is a time when your option bias is going to be negative. Here was a positive option bias, here's a negative option bias. Now notice again this 3-2-1 pattern, strongly negative, less negative as it becomes oversold, gets a bounce, gets a big hit. This is the Brexit period right in here, and then gets very oversold. The N1 reading is termination stage, and you can see the reversal that occurred in there. Once it becomes positive right over here, and this is the 89-day moving average. It's not really related to these. I just left it in there so you could see the relationship because that's one of my favorites. So P3 here, you get a 6-week rally on the upside until it terminates on P2 where it becomes slightly overbought. That's not, when you're lucky enough to get a P1 reading and you're really going to get the orange termination like you got here at the bottom. That's really a strong signal. When you get the P2, you know you're slightly overbought, and from P3 to P2 is really where you're going to have your strongest upward bias. From N3 to N2 is where you're going to have your strongest downward bias. So this is really a beautiful example of how to use this. There's going to be periods where you're in yellow zones where it's not going to be saying a lot to us, But when it does, that's really the key. Let's take a look at Facebook in here, and you'll see again. Now remember, these are the colors as they would be right out of that table, so that you can get an idea. I just did this on 7 charts so that you could get an idea of what it looked like. So this is interesting because your P3 reading comes in here and the stock goes nowhere, right? But if you were short call premium in here, well, the upward momentum that was in here would have kept you from being, short put premium would have kept you from being in a lot of trouble. Here, where it goes N3 right there, is where you might have gotten some trouble short put premium, but it warns you about that. And then right over here on the Brexit, it goes N2 and gets oversold and then turns up. Now take a look here at where it turns P3 right over here as both momentums turn positive, and you have a 7-week rally, and you're still in P3 as I look at this right now, and Facebook has not, any dip in there. It's basically held up. So during all of the P3 stage, you're going to be short put premium for option traders. Through the N3 stages, you're going to be short call premium. So this is again affecting your option bias. Take a look in here as the next one we look at is Apple, AAPL, another interesting one. And because this one stayed neutral for a long period of time. In other words, everything was conflicting through right this period. We didn't have anything. But if you look here, where it was in a rally stage, it terminated right here almost 6 months ago, gave you the warning. It became N3 right just before that dip. I looked hard at that to make sure where that came in. Then you had the big downside gap. So it was a 12-day drop in there. Then you got the termination stage on the N1. It tells you very overbought on negative momentum, but very oversold, on negative momentum. And then it goes neutral. It turns P3 right on this bar. You actually struggled a little bit for a week there, but then you got an upside gap, and it ran all the way over here. So this was a 9-week period where it stayed in P3, and that's where you're going to have your short put premium during that stage, short call premium during this stage, short put premium during this stage. Now look what's happened in here. This is interesting because it gave you a warning of being overbought, but then the overbought went away. So you're back to P3 over here. It never gave you any kind of a real warning there, but it is saying that this flag is likely to give you something positive. So that's a look at Apple right there. Let's just look at gold and the spiders so that you can get a sense in here what this looks like. Here is the gold market, and you could see in here, here's a P3 reading. So this, you had a rally of about a month where you could be short the put premium. Here it got neutral and then just went down for a couple of weeks. I don't know that there would do anything but keep you out of trouble in there. Here it turns P3 and you get about a 3-week strong rally. It terminates right where it gets modestly overbought right there. This was oh, that's miscolored, sorry. That should be a red zone right there. So no, that's green. What am I saying? So this was a period it was stayed positive, but actually went down. That would have been kind of a choppy period where you might have lost some money in here. Of course, none of this is going to be perfect. But then it turns P3 again, and that gives you a rally in there. But note in here that what it does is go neutral right here, and then it gives you an N3 reading just as it turns down, and it's been N3 during this whole period. It has not gotten oversold at all, and you could see that the rallies have failed, and being short call premium throughout this period would have worked, as these rallies did fail throughout. So again, you can see when it's P3, the dips bring rallies. When it's N3, the rallies bring dips, and it's pretty consistent in here. Last one we'll look at is the spider. Now this was really choppy right around the Brexit period right over here, but note that when the Brexit hit here, it gave you the termination of the downside on the very oversold reading. In other words, it's negative, but it's so oversold that it's highly likely it's going to reverse to the upside. And right over here, you get your P3 reading, and then you get a 7-week rally right in here. It goes neutral, turns N3 right in here, and it's still N3. So we have this period where it's trying to rally. It could very well be a bear flag that's forming in here, as it has not been able to give you any kind of an idea that it's oversold yet. We remain in N3 with momentum being to the downside based on what we're looking at in here. So that looks like likely to get another move to the downside after we terminate this flag and then roll over. If it's not going to do that, then this will turn yellow, or it will turn green quickly. And if that's the case, you will know that, well, you've entered a new P3 stage. And if that's the case, well, it could be like right over here or right over here. Generally, the P3s or N3s are 10 days to as long as 40 or 50 days on the upside. So that's why we call it a 10 to 50 day window when we look at this. So I went through 7 charts there so that you could see that. Generally, you can see that what these option bias rankings are to keep you on the right side of the longer moves, to tell you when there's a time that maybe you should affect your bias on a trade, because generally fading a P3 or an N3 is going to get you in trouble. They usually go for a while, and those are the moves that option traders struggle with normally, strategic option traders, because again, the goal is to be short premium. They're short verticals, or they're short strangles, or they have biased condors, something that may benefit from option decay. And the idea to raise the odds of success, because trading that way is basically a zero-sum game, a 50-50 probability. You really either have to be good at trading the positions, or you have to really understand how to affect the positions based on momentum, and that's what this is really about. So from a stage of P3 to P2, basically you're on a run, or it's very possible that you will establish a run and accelerate on the upside. The opposite, of course, on the downside for the N3 to N2. So there's no fading in that stage. You really want to have your bias in that direction. When you go from N3 to N2, you're getting a warning. You could end the rally at that point, or the sell-off, or it could start to chop around in there. When it goes to P1 orange or N1 orange, those are termination stages of big moves. That's the final stage. A reversal is imminent. You saw that on these 7 charts. I've gone through a lot more of them just to test them and retest them and be sure. And those are the points that you want to put on trades that are counter trend, that because you have a very high probability of reversals at that point. Right now on our rankings and setups, I think we have 2, one P1 and one N1 orange that are in these termination stages, reversal stages. So they don't come that often, but you really want to watch for these, P1s and P3s and N3s, where you can get runs on the upside or long declines and affect your bias on there. So I know this was long. I really wanted to go through it very clearly so that you can get a sense for the how to use all of this on rankings and trade setups. And members, you can ask me questions right in the website, and other people, if you're seeing this, you can write to slim at askSlim.com. Again, this is level 3 raise and level 4, which get all of our charts and all of our rankings and trade setups with option bias, and then all of our videos. So that's it, and I hope that was valuable to you.